Alright. Oh, welcome guys. Hello. Let's bring that music down. Wow, almost 5. Is that 5 likes already? We just began, awesome. Welcome guys, welcome. Let me bring down the music a little bit more. Let's bring our mic a little bit closer. Okay. Alright, welcome guys, welcome to Tuesday's stream. Like I said, on yesterday's stream that we'll be doing our regular schedule here for Tuesdays. Alright, so I want to talk about, well, is the market top in, right? And that is a question that everyone has been asking now since we've had a great rally from April's lows and the markets have tipped to the positive side after today's price action. And so, you know, this entire rally, first of all, has been extremely hated, right, by a lot of people, especially the bearish group. And I think they're gonna get even bearish, even more. And there's a possibility that we can be seeing this bearishness actually affecting the markets by the end of this week, or most likely next week. And there is a slew of factors and reasons to believe this. So let's go over them tonight. Alright, now, if you guys are new here, make sure you guys hit that subscribe button down below, and make sure you guys hit that notification bell as well if you guys want to be notified when I am live and also when I have uploaded a new video. Okay? Alright, and of course, make sure you guys hit that like button down below so that I know that you guys are understanding what I'm saying here, and also that you guys are hopefully enjoying what I'm saying here, and obviously if you guys can apply what I'm saying to your own trading, which I really hope that you guys can in the next couple of weeks based on what I say tonight. Okay? I think I should probably lower my music down a little bit more. There we go. I think that's better. Right? Right, guys? It should be better. Okay. Alright. So, let's go over the first reason. Okay. So, number one, right? We're full stock strength. Okay. And for example, we're seeing Tesla, right? We're seeing nvda. So basically the leaders, right? And they're moving drastically. They had huge price ranges today. And compared to the overall markets, right? It seems like markets have slowed down. Now, you can even see this on the volume itself, okay? So if you take a look at yesterday's volume compared to today's volume, the volume has dropped lower. Now, is this a very significant drop? No, right? But nonetheless, when you're comparing the overall price action and volume with the overall markets, like the S&P 500 here, compared to the other individual tickers like the leaders that we have in nvda and Tesla, the wide ranges that we have from those individual stocks are clearly telling us that there is a slowing down effect happening with the overall markets. Now, another at the overall market breadth. Okay, oops. I don't want to do that one, but if I'm able to find it here, if my connection works out or not, I guess not. But anyways, what I was trying to show you guys is that the overall market breadth has actually calmed down a lot today compared to the overall expansion that we got since I believe April 30th. So right at the turn of this new month, right? There's that very quick flip, and we saw the market breadth expanding overall, and we started to see some really good strength, holding a strength from the markets, relative strength for the very first week of May, right? So, you know, as this strength continues, though, right, I'm a bit concerned as to where the market will top out, right? And that's the entire topic of tonight's stream. And so I give you guys two reasons here a slew of reasons. There are a bunch of reasons I'll give you guys more as the night goes on here, but those two reasons are the major reasons to be looking out for that top here. So market breadth, the fact that we're seeing individual leaders moving a lot more compared to the overall market, right? Because again, these individual leaders contribute a lot to the overall market's price action as well. So when we start to see just it's almost like a gut feeling, guys. I don't even know how to really explain it or give it to you guys in a good detailed manner. But you know, when you start to see the markets at some point starting to really tighten up, while individual names and leaders like nvda and Tesla have a wide range price day, something is off. Right, and that tells you that usually the markets are about to slow down from its current rapid run up or maybe rapid move down, and we can start to see you know, some sort of consolidation to appear. Now in this case, we're gonna see, first of all, a rejection. That's exactly what we need to see. Now from a technical perspective, and here's the third reason, we are at a very good area for a very large rejection. Okay, and why is that? Well, first of all, the price was able to break over this major 485 whole number level. Now, if you guys remember, 485 was a part of 3 other whole number levels that were the downside targets for a move to the downside from earlier this year. So specifically, late February all the way up into mid-March. Okay, and so what happened was that, well, we had 3 targets, right? Downside targets, specifically $600, the psychological whole number level of 600, and then we had 585, and then we have 574.50. If you guys remember, if you guys are part of the CFO Swing Watch report readers and a part of the private CFO Discord channel, you guys should know and remember that I gave you guys these targets, and the price just absolutely blew past them, and we continue to break each of these individual major levels of support. And obviously we continue to slide lower as we got even more news of uncertainty and fear from these tariffs. Right, now I'm going to talk about these the tariffs again as well later in the night, so please stick around, and it's very important. Okay, and so with these levels now, obviously we have broken past 2 of these latter half levels, right? So 574.50 and 585. So what does that mean? Well, that just simply means that all the supply that had accumulated at 474.50 and some parts of the supply at 585, I'll explain why am I saying some parts, why I am saying some parts, 585, excuse me, is that you know, we have crossed over both of these, right? And we're now sitting above him, right? And we continue to stay over these 2 levels. So now specifically for 585 though, right, after we've absorbed all the supply standing over 574.50, okay, we are at a pretty significant level of new resistance, right? This is a new level of resistance since we're looking at an old level of support at 585. And this old level of support was broken to the downside with a lot of volume and very quick too. It is very, very quick. There's a lot of relative weakness, and the velocity that it went to the downside was very, very high, right? The velocity was very high. And so, you know, with this 585 level, I wouldn't be surprised if we try to start consolidating or at least see some increased volatility within this 585 level. And I wouldn't expect it to just blast off into the next major level of new resistance at $600. Okay, and if you do, great. Why? Because I am still net long. But you know, I also have a hedge, which I'll also talk about later on in the stream. There are 3 things I need to talk about. But so you know, with this move to the upside and close over 585 today, clearly indicates that we do have a very, very good probable chance. Thank you guys for your reactions in the stream. I see it there. That we can see a rejection at 585 later on in the week, maybe in as we head into May's OPEX, which is this Friday, and have a nice move back down. Right now, when I say a move back down, where should we go back down to, right? So first of all, we have a very massive gap up area that we need to fill in. Now, if you guys remember on Sunday night, not Sunday night, I think, well, I do believe I did write it in the report as well, but I believe I said it yesterday night as well during the stream. But I said that the markets are most likely going to continue to move up higher with this gap and go moment. And that's exactly what we did today, right? We gapped up yesterday and we continue to go today. So a gap and go moment, right? A GG moment or GAG, or actually not, not a gag moment. Gap and go, so GG moment, right? So, you know, if we do pull back, okay, I want you guys to take a look at the daily 200 SMA on the S&P 500 because it's very interesting. Why? Well, first of all, we have a very, very nice curling up higher of this 200 SMA on the daily time frame. Now, why does this matter? Well, that simply means that the price has moved so drastically to the upside and very quickly at that as well, that the daily 200 SMA is willing to support any long-term buys. Now, I'm going to answer the second question that I have for everyone, right? So I said in the description box down below, right? And what do you do if you missed out on this market rally? Okay, so here it is, right? Here's the answer to that question. So with this 200 SMA starting to curl up higher because it's trying to basically tell us that it's ready to support any type of a retest of the daily 200 SMA on any type of pullback, right? What you need to be doing is hawking this daily 200 SMA. And if we come back down to retest this daily 200 SMA, we're also going to be coinciding with an official retest of this 574.50 support level, right? And so as long as we can pull back and come back down to 574.50 and retest with the coinciding retest rather on the daily 200 SMA, we should be finding a very good dip buy opportunity for anyone out there who has completely missed out on this market rally from April's lows. And again, here at Charts Focus 1 and in the CFO Swing Watch report, we were scouting for an April bottom since April began, and that's exactly what we got. So hey, the guidance has been absolutely on point since this year has began, and also, well, since 2023, right? 2022 was a bit tricky, but 2023 turned out to be amazing all the way up into where we are at now, right? So with this potential, right, move down now, you guys also have to remember that we're also going to be going back down to partially, maybe about a fourth of this gap up area, and that's completely fine. And just like I said yesterday, this is a gap and go moment. I wouldn't expect the markets to completely fill in this gap up area, right? Now, what are the next steps after we potentially get a retest at 574.50 and at the daily 200 SMA? Well, I simply want the price to move sideways, all right? I do not want the markets to move lower, right? Lower and lower, and eventually break below the daily 200 SMA and maybe even break below the daily 10 SMA, which is rapidly catching up. And at that point, guys, just mind you, my daily 10 SMA, this red line here, okay, that's closely supporting the price here and all the buyers in the short-term perspective and trend, will most likely be near this 574.50 level once we do see the price coming back down to retest this at this level and at the daily 200 SMA. And that's important because that'll provide further short-term support on top of the long-term support that we should be getting once we're able to retest with the daily 200 SMA. Does that make sense, guys? Hey, 6 likes. Thank you guys so much. Hey, welcome guys. Welcome in, welcome in. Make sure you guys hit that like button down below. Alright, let's change the music there. bit more exciting. Okay, there we have it. Okay. That's better. Hopefully you guys are understanding what I'm saying here. If so, please let me know down below or in the chat room. Alright, perfect. Okay, so hopefully you guys are absorbing this information in. So that's from a technical perspective now, okay? And what you want to see is just maybe for a week and a half or so of consolidation, solid consolidation between 574.50 and 585. Maybe not all the way up to 585, but if you do see another retest at 585, if we have moved back below this level, then that will make it an official lower high, right? And that would be fine because again, as long as we consolidate this entire move up higher, or at the very least, consolidate this gap and go moment here that we have with this large gap up area, we should be seeing some very good solid consolidation that can eventually give us yet another leg up higher. But then again, that's something that we'll discuss on Thursday's stream, so I won't forget that. So make sure you guys catch me on Thursday as well. So with that being said now, right, you know, I personally think that the top will most likely be in by the end of this week. So if you guys aren't hedged yet, you guys aren't late, you guys are most likely going to have a better timing than me since I am already hedged today, starting today. And you guys will be hedged, you know, maybe potentially tomorrow, Thursday, or Friday, who knows, right? But nonetheless, hopefully you can understand what I'm saying here and you guys can use this information to give yourself some good guidance for the overall market action and to protect yourselves, your portfolio, especially if you guys have been able to ride this market wave up higher with us, right? Now, with all that being said, let's take a look at the things from a bit more of a macro perspective, okay? And why am I saying that? Well, first of all, let's talk about the tariffs now, okay? So this is important, all right? And you guys might not be thinking that it's not important, but it's important, okay? So first of all, right now, the US and China, these two are the major power players, right, of the entire tariff war and trade war. And basically, what has occurred so far is that Trump just removed all the tariffs, and I think we're sitting at 30% of tariffs, right? Which is still very big, mind you. 10% is still pretty good as well, but it's a pretty good chunk to place on goods, on you know, on goods that consumers consume and buy. Anyways, right? You know, this 30% moved back down from like I think it was like 100. What was it, 148%, 145%, or what was it? Yeah, 145%. And I think there were plans even to go higher, right? And obviously the markets did not like that, not one bit. And so basically Trump had caved in, right? And he removed the tariffs, and China also removed tariffs as well. And so basically we we just came right back to square one. Not exactly, but since we still have tariffs from for the US at 30%, right? On Americans, basically, right? Tariffs on American consumers at 30%. And that is still not good for the macro perspective. And also, this potential quote-unquote agreement, there's nothing agreed upon other than, right? Other than, this is the moment where you guys should be listening into, right? Other than a 90-day pause. Okay, and within those 90 days, we need to hope that Trump and his advisors and then whoever's working on these potential quote-unquote deals, if there are even called deals at this point, is going to come through, right? And this is the reality of this, right? It is not a political take. This is the reality, right? And again, this period of 90 days is still yet another period of uncertainty. And guess what? We've already had another 90-day pause for the other tariffs, not including between the US and China, right? We had this 90-day pause news or catalyst on April 9th, which is why we had this huge gargantuan candlestick here on April 9th, right? If you guys remember. And that was basically stating that there's going to be a lot of pauses on the Liberation Day tariffs that Donald Trump revealed on that day, on Liberation Day, with that whole press conference and his little board, right, that he had. And that's good. But then again, we had yet another 90-day pause that was achieved over the weekend, right? And so we have two 90-day pauses for two separate tariff situations, right? One is with the US and China, and the other is with the US and the other countries, right? And this is going to provide more uncertainty down the line, right? In the next 3 months. So again, 90 days, right? So, nothing has changed, right? We haven't seen any significant plans for manufacturing to move back into the US. I mean, that's the reality. I don't know if you guys are gonna argue with me and say that that's not the case, but that's true, right? That's the reality, right? Those are the facts of this case. And Trump has already brought down tariffs to 30%, which is still high yet again, right? And so what's gonna happen next, right? Because again, that's the uncertainty. Because if nothing has occurred where the US comes out on top, or at least manufacturing starts to come back into the US, maybe we see more larger actionable plans to bring back manufacturing back into the US for certain sectors that will benefit from it. Again, this has to be all structured out and planned out carefully. All right, again, carefully is the key word there, which hopefully they can start doing that. But again, we haven't seen anything like that. So what is the uncertainty? What is Trump going to do if they don't find a good quote-unquote deal with China, and if you don't see the preferred US manufacturing coming back into this nation? What would be the answer, guys? Who can tell me? What am I trying to say here? Put it in the chat below, guys. Anyone? Anyone have any answers? I know there's 16 of you guys here. Anyone want to answer this? I see reactions, but do nothing. Increased tariffs. Yes! Ding, ding, ding. There it is. Hey, welcome, guys. There's some people coming in right now, but make sure you guys watch the replay. Okay. You guys are about 20 minutes late here, a little over 23 minutes. But yes, that is correct. All right. So tariffs did not come back down to 10% or where it was previously before any of this began, any of the trade war began back in March. And so this drop back down to 30% is going to give the US, or at least Trump, some leverage because of this uncertainty if this deal is going to be achieved within 90 days. And then those 90 days began officially, I believe, yesterday. So with tariffs sitting at 30% with China, okay, this might just provide a foundation for Trump to increase tariffs again. And what is that going to do with the markets? All right, how are the market makers going to react? Well, negatively, right? Because that just means that the trade deal did not work out with China, which again is the main country that we are looking at for a trade deal to occur. Again, what trade deal? I do not know, right? Because if, again, that's the uncertainty. Those are the doubts and fears and uncertainties that we are currently holding now that we need to think about as we move forward with this 90-day pause. Because Trump can yet again raise tariffs again to quote-unquote threaten China if a trade deal is not achieved within 90 days. Okay, and that is the current uncertainty, and that's the current thought that I personally have, and I'm pretty sure a lot of market makers are holding now too, hopefully. But you know, if that does occur, there is a high probable chance that we can be seeing a rejection back down all the way to 565, right? Or possibly even a rejection down or continue move back down to 549.50. And you know what? This will be a pretty good retest, to be honest. But then again, if you move all the way back down to 550 or 549.50, that is a pretty hefty percentage and a pretty big hit to the gains that we've had so far, right? So here it is, right? It's nearly negative 6.50%, and I think almost half, nearly half of the gains that we've seen so far since April's lows, or at least what, like 40%, 45%, or 30% maybe, 35. Anyways, right? Hey, welcome guys. Whoa, it's 20 people here now. Guys, for anyone who's just joining in now, you guys have missed quite a lot of important things that I've talked about. A lot of the reasons why the top could be in from a short-term and long-term perspective. So please watch the replay of this stream. All right. So again, there's more than 20 people in here now. So there's more people coming in. Awesome. So make sure you guys watch the replay. You guys do not want to miss out on that. Right now, if anyone who is watching the replay right now in the future, make sure you guys hit that like button down below. And if anyone who just came in and you're now dialed in and you guys are listening in closely, please smash that like button down below. It's one of the easiest things that you guys can do to support me. It takes less than a second and it really helps out with the overall channel. It lets YouTube know that people are enjoying my streams and my videos, and again, you know, it just overall lets me know that I'm talking about stuff that people want to hear about. Okay, and not just that, but most importantly, right, hopefully you guys are able to apply what I'm saying to your own trading, right? And all this market guidance is really helpful. Okay, so that's the macro perspective for a potential further downside move, further than 574.50 or even further than 565. Okay, so you guys have to be cautious of that macro headwind. All right, and currently right now the macro tailwind is just the fact that you know, we're supposedly getting trade deals done, and also most of the really rocket sky high tariffs are mostly gone, right? Even though we still have some pretty high tariffs still left. We have 30% with China. So, you know, this is one of those things where you guys have to carefully consider your time frame, right, with your trading. And, you know, and just like what Do Nothing said, they're increasing tariffs again. You guys have to either focus on focusing on the longer term and try to price in that potential uncertainty with a potential increase in tariffs again if these quote-unquote trade deals aren't done, or from a short-term perspective, you guys can be active and figuring out where a technical rejection can occur, like I've shown you guys tonight with this 585 level and this 574.50 level, along with this coinciding daily 200 SMA, which is this yellow line, right? So again, right, there is a lot of different probabilities, but I've kind of, you know, honed it down to more of the higher probable occurrences that can happen for the next couple of trading days, at least into the end of this week, which is May OPEX on Friday and post OPEX too, so maybe in the next 1.5 to 2 weeks. So please watch the replay again if you guys are really want to hear what I have to say one more time before you decide to apply the information that I've given to you guys tonight to your own trading ideas and to your own portfolio. Okay, so here is a quick summary of what I want to say tonight, right? Or what I've said tonight already. So short term, we should have formed a top, right? I mean, we are starting to get a little bit close to being overbought, but then again, just as a reminder, all right, on the RSI, it's at 66.49, but it's not. It does not mean, all right, it does not mean that we are going to be seeing an immediate rejection just because the RSI is at 66 or close to 70, which is the official overbought level or value, right? And again, it just simply means that buyers are very, very strong. That's it, right? So again, even without the RSI though, right, we are starting to get overextended. Why? Well, market breadth is starting to slow down, as I told you guys, and individual stocks are starting to provide more price ranges, or actually I should say it like this, increased price ranges like Tesla and nvda, which are market leaders, and they're moving a lot more compared to the overall markets. So that is something to be considerate about as you move onto tomorrow's price action and into the rest of this week's price action. And mind you, I wouldn't mind if we just moved sideways, right? Maybe we have an inside day tomorrow on the markets while individual names continue to rally to the upside like we are seeing with Tesla and nvda. That'd be great, right? You know, as long as you guys understand that you guys should be hedged if you guys have that short-term mindset compared to the overall macro mindset, like with the tariffs, right? And again, do nothing absolutely spot on. Great job there, okay, with that answer. But yes, you know, if you guys have that macro perspective, try not to be too worried too much about that short-term technical rejection that we should be seeing, a nice pullback post OPEX. So maybe next week, but then again, I'm already hedged, which is why I could be slightly biased. I could be considered slightly biased, but I'm not biased, guys, because guess what? It's a hedge, which means I'm net long, right? I am still overtly net long, which is why I decided to get hedges today, right? And if you guys want to know what those hedges are, please join the CFO Discord. And how do you join the private CFO Discord chat room? Say it with me, guys. You guys have to become a reader of the CFO Swing and Watch report. Okay? Because once you guys do that, you guys will become an official private member of the private CFO Discord chat room. All right? Does that make sense? Is that clear? Okay, so that is my answer for you guys. All right, that's the answer. The top is in from a short-term perspective. That's truly what I believe in, based on what I've just described to you guys from a technical perspective, and just on a bunch of other slew of factors that will potentially give us that market top into the end of this week, but most likely into next week. Okay, so please be hedged for anyone who is applying that short-term time frame to your own trading. And for the macro perspective traders, right, the macro long-term time frame traders, please consider what I've told you guys about tariffs, okay, and where we stand on them right now. Okay, now before I leave you guys here, I want you guys to know and remember this, right, what I'm about to say. The markets have voted what? What have they voted on? They voted on the fact that the markets and the overall economy should do a lot better with tariffs going down, right? And that's the reason why we had a massive blast off from last Friday to Monday, yesterday, as we had that tariffs coming back down on China from 145% to 30%. So that's clearly what the market wants, and that's what the markets are clearly indicating could be a better course for the economy in the next couple of months, right? Possibly into the end of this fiscal year. But then again, that short-term uncertainty also starts to weave in to that macro perspective. And so the markets are still going to show some uncertainty with that voting, right? And so we need to be careful and and just trail the market price action very closely, right? And hawk every single major catalyst regarding tariffs closely as well. Does that make sense? Yeah, 4-week long bull trap is tough not to FOMO into, but I'm still holding cash. I see, yeah. So hey, you know what? You know, a lot of people out there who are not part of the CFO Swing Watch report. Now, I have to plug that in because again, we've been absolutely on point with the navigation and guidance for the overall market since 2023. So, you know, we haven't missed so far. So, but Yuck Wood 9, don't worry about it, because most of Wall Street fund managers, we just learned today that they have this rally, right? They weren't even looking for a bottom in April. So just like how we were doing already, we were going into April looking for a bottom. By the way, for any of the members out there watching the stream right now, you guys should remember that, and you guys should go back to the reports in March and April and early April too, in the very first week of April, because we went over this. But anyways, I'm done plugging that report in. You guys can find all the details in the description box down below. But yeah, Wood, I wouldn't fret about it. You know, don't be, you know, trying to buy everything at these highs here. Just be patient. You know, I would say there are going to be some more opportunities next week. Just continue to watch how the markets move this week, like I've said in this stream so far. Whoa, there are 40 people in here so far. Wow. Welcome, guys. So, you know, I think it's very, very important that you guys understand all of this and what I've said. And again, if you guys are just coming in, right, and if you guys did not hear every single piece of information that I've said so far in the beginning of the stream, please go back to the stream replay once I'm finished here. Okay, you guys have to watch and listen what I say during this stream. Okay, so please go back to the replay. All right. Okay, so please stay patient. Focus on those short-term and long-term macro perspectives. And yeah, hopefully this technical analysis was very, very insightful and most importantly applicable to your own trading in the next couple of days, maybe even tomorrow, who knows. And yeah, stay hedged, stay protected, and good luck to you guys. All right. Now, before I sign off here, if you guys want to become a reader of the CFO Swing Watch report, I have a special discount for you guys. Okay. If you guys DM me on Instagram at ChartsFocus1, you guys can find my handle in the description box down below. Everything is in the description box down below. But if you guys DM me, and if you guys are going to join tonight, and if you guys DM me, letting me know that you guys will join either tonight, okay, or at least by tomorrow morning, yeah, that'll be my grace period, okay, you guys will be receiving a 50% off discount code for your first 30 days, okay, and I can guarantee you guys will not regret joining, right? And again, I'm not saying these words; these are all the words that I've said and heard. Well, these are the words that were heard from the readers. Okay, so the CFO Swing Watch report readers have all said this to me, and they have not regretted joining since they've joined. All right, so hopefully that will be the same case with you guys. And if that is not the case by the end of your 30 days, well, then you guys can not, well, continue. Right? So again, I'm very transparent with that. So please, if you guys really want to join, don't miss out on this opportunity, okay? Please do not miss out on this opportunity. Just DM me on Instagram at ChartsFocus1. If you guys don't know how to spell that, well, I mean, it's the channel name here. Just search it up. I have the same logo. It's a very, very, very quick search, and I'll pop up right away. I have a very unique name. If you guys didn't know, ChartsFocus1 is the acronym for CFO, right? Or I guess I should say CFO is the acronym, right? Okay, so yeah, you guys have that opportunity to join for 50% off. Okay, again, 50% off for your first 30 days. And all you need to do is simply DM me on Instagram at ChartsFocus1. Okay, at ChartsFocus1. All right. Okay, so hopefully I answered both of those two questions that I've outlined in the description box down below, and hopefully it has satisfied and satiated you guys tonight about where the markets can go by the end of this week, and most importantly, in the next 1 to 2 weeks, which will be very, very important, especially for anyone out there who has not participated in this market rally. All right. But anyways, guys, like I said, the CFO Swing Watch Report readers and all the private CFO Discord members have done absolutely well due to the giving of my guidance. And I can say it's my guidance because I have provided the guidance through these reports, right? And so, that's not even being, that's not even being humble. I'm just being very realistic, right? I don't think I'm being overtly confident, but it's just the reality, right? So all the guidance and navigation has always been provided by these weekly reports that are sent to you guys, your guys' inboxes, your respective email inboxes every single Sunday night. So if you guys want to join, make sure you guys look at the description box down below and the link to the report will be there. But again, please do not miss out on this opportunity. If you guys want to join tonight or by tomorrow morning, and if you want 50% off for your first 30 days, just simply DM me on Instagram at chartsfocus1. And with that, thank you guys so much for watching. I'll see you guys on Thursday at the same time at 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. Good luck tomorrow and have a great rest of your night.